Let's bring in Invesco Chief Global Market Strategist, Kristina Hooper. Kristina, it's great to have you. I am curious, we'll get to the data and the banks in a second, but there is a school of thought that next week at the presser, we might get some new guidance about the cadence of the Fed. Do we get a 25 and then a pause and maybe another 25 and some? Do you think that clarity is coming?
I think we should get more clarity, yes, next week. But the question mark is, what is it going to be? The next week is going to be a long time, and a lot could happen between now and then. So, yes, I understand. The hope is that the Fed can act as though it's business as usual, that the credit facility has resolved the problems in U.S. banking. But it could very well be a situation where you could see more contagion and the Fed feels as though it needs to hit the pause button. I think then what we're likely to get is a conditional pause, right? And they're going to say, we're going to watch the situation evolve and react. And at the end of the day, we're data dependent. So it may not be completely clear. We might not get great clarity next week if this situation is still evolving.
Right. Meantime, we've seen some big trading desks either add to their underweight on equities or argue that cash is a better position for the year if you're looking for total return on the S&P and the low single digits. Where's Invesco right now on that front?
Well, we've always believed in taking a prudent approach and having a long time horizon. If you have that, you can be well diversified and take advantage of what can be market panics that create pricing inefficiencies. Now, if you're a short-term tactical investor, you're likely to want to be defensively positioned. I certainly anticipate a lot of volatility going forward. I've been saying this for a while. We don't have a lot of clarity on the Fed. Every day the situation changes. In fact, what's been overlooked today is that we've gotten a PPI number that is, I think, would have created a positive reaction in markets, but for what's happening on the other side of the pond. So tactically defensive, but for those with a long time horizon, there are opportunities as long as one is well diversified.
Kristina, I always say, Jay Powell has a tough job right now, but Christine Lagarde has an even tougher one. And the ECB has a meeting tomorrow where she is expected to raise interest rates 50 basis points, a double because of the inflationary problem, which has only gotten worse in Europe. Now, they've also got some banking issues, namely Credit Suisse and the contagion effect there. What do they do?
Well, you're absolutely right. Christine Lagarde has a more difficult problem, especially since the ECB, to a certain extent, has painted itself into a corner by communicating in advance that it anticipates hiking rates 50 basis points. They haven't done it yet, and I think they should have the flexibility to take a different tack and really only hike rates 25 basis points, maybe even hit the pause button. Keep in mind that inflation in Europe is a different beast. It's much more driven by energy, which this ECB can't control. Central banks can only manage the demand side of the equation, not the supply side of the equation. And one could argue that it's a fool's errand to really try to control that with rate hikes. It's going to be difficult, and especially now that we have the potential for financial accidents. There's real fragility there. I think the better course of action is to be prudent and thoughtful and go easy.